Happy Memorial Day to everyone and whatnot. Today's date is 5/27 of 19 at 9:38 a.m. Pacific Standard Time. What I'm going to talk about right now, this is a 5-year chart with monthly candles. And what I'm going to reveal to you is something that you better listen, and you better listen carefully. These markets are in a super all-time bubble. And I'm going to break that down. This is a yearly chart. I'm not going to go to the other ones, but the thing that I'm going to talk about is the buyback programs have added $5.2 trillion, and it's very corrosive. It's corrupt practices, and already in a corrupt economy, the volatility is at the lows, consumer confidence is at the highs. But every time I called a bubble, 1999 and year 2007, it had the same characteristics. It had the same PE ratios that are off of this chart. And those particular PE ratios that I'm talking about, they came down. The last three bubbles is the same data you are reading now. Jones gets paid. But guess what? We're talking about you getting paid and the bubble. Another thing is that these corporations, in 1929, there was a similar incidences. In 1999, and I was here, and 1987, and I was here, and in year 2007, I was here. And we are at right now in this last year, this last 10-year period, the stock market has been leveraged up with $5.2 trillion in the last 10 years. And over the next 18 to 24 months, we're just right around the corner where that process is going to happen. And when you take the culprits at 5.2 trillion, when they cannot buy any more of their stock back, and a lot of these people that bought their stock back financed it, meaning they got a loan on from the bank to buy their shares back. So that loan is going to come due. The other thing about it is the market margin debt at all-time highs. Corrupt earnings will come down. The last three bubbles is the same data that you are reading now. Get paid as the bubble pops. Understand that these current ratios, PE ratios I'm talking about, are not going to be able to go any higher. And this is going to be a big event. Now, let me just tell you this. Dow Jones biggest bubble special alert, everyone. Tell your friends and your family. They're going to be affected. When we go into a massive bear market economy again, and this can happen very quickly. Why? Because when the people can't keep buying their stock back, there is only going to be selling. And selling will go down at a very, very rapid growth. We have 6 months left in 2019. Now, we start that 12-month process in 2020. This is where we are going to set up in this 6-month period. We're right here at the turning point. I can tell you that. But tops, bottoms, markets take time. So we have to use the right format. It can happen a lot sooner. So in 1929, when these people buy their stock back, and they've run it all up here to a super bubble, every time we have a quarterly earnings season, oh, the board has authorized $3 billion to buy our stock back. Look, that is going to come to an end. It's already going to go into Congress right now, and they did finance their funds to buy back. We have record high levels along with the companies that have bought their shares back. This is all going to stop. Congress has now, in choice of the matter, to go ahead and try to stop that. And the bubble didn't get put in because of China or the economy. None of it. That is not the reason why we're in a bubble. The reason why we're in a bubble is because of these buybacks. And when they stop, the cycle will turn violently and whatnot. And I guarantee it. So here we go. Back in 2009, when I was here, we called that bottom in February. We raced right up and we kept going higher and higher. We were coming out of that bear market. Year 2013 is where we started the breakout off of the 2009 low. You can clearly see that we've got up here to a massive top. And this is a 5-year chart with monthly candles. And you can see right here, we're already going to start that. We're going to come down. We're going to break below 21.8 at the near term, 21,000 right here on the Dow. But when all of this unravels, here's what I'm going to show you. What you can see is where the Dow is down here at 10,000. That's where we had that breakout, and 8,000 below it. What I'm saying is when this bubble is being popped, they're going to go all the way back down. But remember one thing. It's going to affect you and your family. And it's going to have a big toll on the unemployment where it could go back up to 12%. And all of this will come unwinding, massively unwind. And it will. There's a timestamp. I'm telling you this now because anybody that views our channel, we care about you. And we do. If we didn't care about you, we wouldn't be putting this data out. And we do have a great trading division. And when things are going to go bad, you make lots of money, man. You get super rich with us when this explosion happens. And the bubbles will be popped. It's a time process. So one thing I can tell you for sure, you'll remember this for the rest of your life. Wow, it was only like over a year ago I heard what that guy said and it's happening. Let's not be one of those type of people. Let's take action. And the action that needs to be taken is that you need to come into our live trading room, and you do. And basically what I am showing right here is exactly what we need to see on this 5-year chart with monthly candles. The whole thing is going to blow up. And every time that these people have ran these markets up in a bubble with repurchase buyback programs, this is the biggest bubble over the last 10 years. This is going to be the biggest bear market in your lifetime. And it will. And the corrupt policies and the corrupt practices, a corrupt economy, the volatility is at all-time lows. Consumer confidence is way up there toward the high. This is what happens when something is going to get unwound. And that margin debt, oh yeah. You want to talk about margin debt and people having to sell all the way down? These days are coming. And they're in our longer time frame. But we are going to have a big downside in these markets. The volatility will increase. The trading ranges will be wonderful when it comes to our option trading. When stocks are moving $25 or $30 and we're buying calls or puts, we got plenty of room and plenty of liquidity volume in the option market with high beta moving stocks, period. That's why we only trade the ones that have $10 moves intraday or $30 moves, Amazon being one. Congress has no choice but to go after this bubble who created this repurchase buybacks, $5.2 trillion over the last 10 years. And it's going to come to a big end, and it is. One of the other things I'll show you very quickly, there's a lot more stuff that I'll be putting out so that you have the updates that go there right away and whatnot. We can see where we are in a 5-year chart. We were using that 2009 burn from the last 10 years and whatnot, and how they massively, corporate of America was buying all of their stock back. And they kept buying it all of this whole 10 years. It's going to come to a stop. And then the only thing that's going to be left is the sellers. That's it. I'm telling you right now. I'm telling you on 5/27/2019 on Memorial Day. I felt it was my duty to go ahead and start preparing you for this. Now, and what I mean, housing market's going to go in the toilet. Housing market's going to go straight down by 50%. All of these things are going to happen. And my fear for you is that you're not prepared for it. And being prepared for it is what you're going to want to do. You're going to want to look at your job when they start laying people off again. You don't want to be behind the curve. We have some time in here. This next 6 month volatility is where you see these ranges increase. And then in year 2020, it's going to be really bad. But right now, we could drop an easy 30% right now. The full pullback on this Dow chart that you're looking at, 5 year with monthly candles, you're talking about a 60% move down from the highs and could even get worse than that. Just remember, this does not happen in one day. This will happen over our time cycle, and we will be pointing it out as it happens with the intraday ranges and the earnings season, everything that you're going to need to know. And you're going to need to know these things as we start moving through the rest of this year. And you're going to have to look at yourselves in year 2020 and what you're going to be. Massive unemployment will be coming again. People will start laying people off because once the law is passed, it's a federal law about these illegal practices of buying your stock up. It's never been the problem with the economy. It's always been with the problem. Every bubble has been taken into account. Every bubble has been taken into account because these people keep just jacking their stock up when they can't buy anymore. And the only thing that will be sellers that will be going down. When the Dow was at 14,000, which is this trend line right here, let me just show you.